Hello, and welcome to the Cryptocurrency News Channel. Big news today, a California pension fund, that's right, a pension fund, a lot of money, just loaded up on Riot shares during Bitcoin's Q4 rally. What are Riot shares? Riot is a cryptocurrency mining company. So it's like they invested in Bitcoin just through a proxy because obviously a Bitcoin mining company's profits and fortunes and what it can actually make the pension fund is going to depend on the price of Bitcoin itself. Very bullish, I would think. I think these pension funds are just waiting for the regulatory clarity to actually dump their money into the cryptocurrency themselves, but they actually have loaded up on Riot shares because they can actually invest in shares of a company that actually mines Bitcoin, and that's pretty much like them investing in Bitcoin itself. So that's very good news. The largest, and this is the largest public pension in the US, bought more Riot shares for the first time since 2017. So they seriously loaded up. California's 441 billion public pension fund increased its stake in Bitcoin miner Riot blockchain nearly sevenfold in last year's Q4 amid the meteoric run-up of the price of Bitcoin. So like they basically tupled their investment. I think that's what 7 is. California Public Employees Retirement System, KYPERS, held 113,000 shares in Riot worth over $1.9 million at the end of 2020, according to the Tuesday filing. It's still not a lot of money, but they dumped a couple of $1 million into it. That's up from Q3 2020 when KYPERS 16,907 shares worth a comparable minuscule $49,000. So they basically went from owning $49,000 of this company to $1.9 million in this company. Now this is like probably a multi-billion this is a multi-billion pension fund, so it's really not that much, but you can see these pensions are just really wanting to get into crypto now, and they actually see crypto mining stocks as legitimate companies, which means by proxy they should see cryptos as legitimate investments. They probably just don't have the regulatory clarity to actually run into crypto, and I think as soon as there's regulatory clarity, whenever the heck that is, they will actually buy in. And that's why I think like the ETF definitely is going to be good for Bitcoin when it actually comes, because some of these pension funds will actually invest in the ETF because they're already investing in Bitcoin mining stocks, whose fates are actually tied to the price of Bitcoin. So why not just invest in Bitcoin when you're actually allowed to? The largest pension fund in the US has been holding firm on its nearly 17,000 Riot shares since acquiring them during the late bull run in 2017. That position sold and varied until now. Riot spiked 541% during Q4 2020. Meanwhile, Bitcoin was up 174% for the quarter. Now, like these Bitcoin mining stocks are actually even more risky than Bitcoin itself because you have like a flat line of costs. And once you get above that cost, like each dollar Bitcoin increases like Riot stock by like $5 or something like that. Same thing as like when you go below that cost, like each dollar Bitcoin goes down probably affects negative $5 for Riot stock. So it's not like these pension funds are avoiding the tumultuous situation or avoiding the risk. They're probably even going for more risk by investing in Bitcoin mining stocks than Bitcoin itself. So they're not afraid of the risk of the cryptocurrency market. They want into this, and that actually means that government entities, legitimate government entities that's funding public pension, do actually think Bitcoin is legitimate for the future. Now, 1.9 million compared to 441 billion is still very little, but I think over time they'll actually invest more. And I think California is not going to be the only one that does this. I think a lot of other states are going to do this as well. So that is the good news for today. Let me know what you think, like and subscribe, and hit that bell notifications button. Thank you and have a nice day.